All right, we'll have people joining us here shortly. Well, as we're waiting for folks, my son jumped into GameStop, and then he also did a little bit of a play with BlackBerry. So I don't know if that's a good thing to know or a bad thing to know, but he knew enough to be dangerous and was smart enough to get out quickly as well.
Well, you got to play to win, right?
That's right.
Exactly right. It's a fun time. Beginning of the year, beginning of 4 years. Lots going on. How we doing on participants? Is everybody jumping in now?
I think 22 are on, so why don't we, Mark, you want to kick things off and let the
I
others
can.
trickle in?
Yeah, absolutely. Well, I would like to say good afternoon to everyone. Thank you for joining us on a busy day. And I'm Marc Wheeler. I'm one of the co-founders of InsurTech Denver, along with Daniel Turgel. So thank you for being here. We're kicking off our virtual series for 2021 with a great group of companies and a great topic, talking about looking at ways people are embedding insurance, looking at different distribution channels. And we have 3 companies represented here today. We have Covered Insurance, we have Slice, and we have Next Insurance. So with that, I'll be turning it over to Daniel in just a second, but a couple of things for us today. Number one, in that if you have any question, look at your chat function. So please submit your questions to us. We'll try to get to them either through the conversation or at the very end. We'll carve out some time. And then secondly, if you're not joining or following us, Emily wanted me to make sure that you follow us on the LinkedIn company page. So if you have an interest in learning more about the events that we have going on and staying in contact with the InsurTech community, please take in and follow us there. So with that, I'll turn it over to Daniel. Daniel will be the moderator and host today. So Daniel, over to you.
Thank you, Mark. Great to see everybody. Thanks for joining us. Everyone who's been with us before, for anyone who's new, welcome, welcome. We are very excited to be kicking off the 2021 year with an awesome virtual panel here. So I am Daniel Turgel. I'm also co-founder of InsurTech Denver. It's amazing the growth of this group. I just noticed on that company page that we're up to 72 followers now, and I thought it was just 35 the other day. So thank you for anybody who's joined. And if you haven't, please jump on there today and start following the group. We're going to have panels every other month. So great panel, as we said here today. Some great folks, InsurTech veterans, amazing people doing incredible things with fresh startups that have made an impact already and are continuing to make an impact in the market. I'm going to let each one of them introduce themselves. We have Ross Diedrich, Philippe Lafreniere, and Basil Enan. Please, Ross, could you start?
Absolutely. Daniel, Mark, Emily, thanks for inviting me to the panel today. Excited to dive into this relevant topic. But I'm Ross Diedrich. I'm the CEO and co-founder of Covered Insurance, and Covered is a embedded insurance marketplace as a product company, and we specialize in property casualty lines like home, auto, pet, renters, and so on, and creating strategic partnerships and embedding insurance and other platforms.
Okay, Philip.
Hi, everyone. I'm Philippe Lafreniere, and I'm Chief Growth Officer at Slice Labs. I've been in the insurance industry my entire career. That's about 27 years. And Slice Labs, we pioneered on-demand insurance. So for us, on-demand insurance is really about making insurance available at the right point in time when you need it with the right products. And, very, very aligned with our topic today, because one of the key ways to do that is by embedding insurance in another experience. So looking forward to talking today about, how that can work, how partnerships can work, and, where where we've been successful at doing that and the impact that it can have on your business and your customers. So again, also thank you for having me today. Really looking forward to this conversation.
Thank you. And Basil?
Everybody, I'm Basil Enan. Thanks for having me. I'm the head of insurance for Next Insurance. I've been here for just over 10 months, so I've never worked a day out of the office, but have gotten up to speed. And over here, I manage the insurance team, so the insurance product team. We're in charge of all of our lines from comp, liability, auto, and our recently launched property. Prior to joining Next, I've been in, like Philippe and others, most of my career in insurance. And right before joining here, I had founded a company called CoverHound, actually 10 years ago, so not right before joining, but ran that for many years, and then I'm excited to be more in the commercial space.
Wonderful. Thank you again, all of you, for joining us today. And a note, we had advertised Lance Poole, who is a friend of ours from InsurTech Denver. He couldn't make it, and we got Basil. So first question is going to you. And I want to preface it by saying this morning I saw Next Insurance at the bottom of my GoDaddy account. I saw a little advertisement there. So it's a great segue into this question. So especially also given your background with CoverHound, we're seeing this increase in strategic partnering and distribution relationships. So do you think it's an escalation in customer acquisition costs? Sorry, I want to say, why are we seeing this increase? Is it CACs are going up, consumer behavior is changing, you're looking for diversification? Can you paint the picture for us of what you're seeing and what's driving all of this?
Yeah, I think it's a couple of things. I mean, in my experience, CACs have always been high. So I don't know that it's necessarily escalating, but it certainly has been something for anybody in the industry to solve for, right? And to figure out more innovative ways to acquire customers. And I think, traditionally being kind of more of an omni-channel acquirer, you're going to look at strategic partnerships as a really important component there. Absolutely, I think there's been an acceleration. There's certainly been an acceleration throughout the entire industry around InsurTech, and I think embedded insurance is really one of the most exciting ones. So I would say that a big part of, to the extent that there is that escalation, has also been around product. I mean, there's a lot more innovation there and saying, okay, yes, we could embed by just saying, hey, it looks like you have a good credit score, Credit Karma, right? And here's an insurance company you should look at. But that's really just the tip of the iceberg. I think, again, putting my product hat on here, insurance companies and anybody in the space is really voracious for data and a different type of data and data that nobody else has. And just to give a more tactical example, we just launched property, and we, like everybody else, is going to say, would you estimate that over 25% of your total sales is generated from operations related to deep frying and grilling? Right? It's a very standard question, and it's one that's important for us to rate on. To the extent that we can be embedded in, let's say, a point of sale for a restaurant or a similar solution for another industry, one, we don't have to ask that question. So the consumer, from an experience perspective, is winning. But we're also winning in the sense of we're decreasing the friction, but also getting more accurate answers. That's a very difficult question for most small businesses to answer. So in that sense, we've solved something there by being embedded, or this is what we would want to do. And then it becomes much more interesting from that. It's not only what percentage, but if we're thinking about liquor, it's not just what percentage of your revenue, but what percentage of each diner's bill is alcohol? How many people are going in for just alcohol versus a more balanced meal? And we can rate on all those factors and ultimately, I think, build a product that is much more tailored to those customers than anybody else could if we didn't have that integration. So I think it's very much a two-way street. And historically, I don't know that there was the technology to do that, whereas today we have it.
Fantastic. Great answer. I want to open it up next to Philip and Ross. Let's stay with commercial for a minute and then go to homeowners with Ross. So Philip, could you weigh in on that? What do you think, and what else might you say?
Yeah, absolutely. And I think, Basil is right. So CAC has always been an issue, and insurance has, one of the highest customer acquisition costs, across, all industries. what we're seeing is with regards to these strategic partnerships is really, you can look at a group. So you can set up a partnership with a platform. So we do a lot of work with platforms as an example, let's say platforms for small business. And now you've got, potentially a homogeneous group that you have access to, right? Potentially, hundreds of thousands, or in some cases, millions, preferably, right? Millions of customers that you can look at, almost homogeneously. And by doing that, and leveraging the data, right? So another aspect that's important, and Basil was talking about the data, is when we partner with platforms, we also try to leverage data that the platform has about this cohort of customers. And when you do that, when you have access to that, you can offer, a frictionless experience. And also the product is very important. You can tailor your product. So I think one of the secrets in that space is not to just take, a product off the shelf and then push it through a platform, but we spend a fair bit of time, making sure that it's the right product for the cohort of that platform, right? So the whole trend towards ecosystems and embedding insurance, gives you the opportunity to basically tailor. And then if you've got a frictionless experience and you've got a product that is tailored for that cohort that understands who those customers are, then you create that stickiness, and you create, and we'll talk about that later, the advantage of that relationship. In one example that we have, as you said, for commercial, we have a task or a contractor platform that we integrate it with, when you can essentially book someone, a plumber, to come and do a job for you, right? It's called Hey Brian. It's in Canada. We can embed insurance right at the point of sale, right? So basically the contractor gets insurance for that job. So it's an on-demand policy, and because it's embedded in the process, essentially you don't have to market, you don't have to really try to reach out to its customers. You've got a simple product, an easy experience, and you can create, you create that trusted relationship because it is through the platform, then everybody wins. So those are some of the trends that we're seeing in this space that, really enable you to, focus on these types of relationships.
Thank you, Ross.
Yeah, I'll zoom out for a second. And I think, well, before I do that, we just heard product and platform and data. And honestly, that's the magic of strategic partnerships and this, new distribution and why we're seeing more of it. But if we zoom out for a second, in insurance, these affinity models have been around for decades. Right. And now that we have technology that allows for product and platforms and data to be exchanged, it's the old school affinity, business relationships to offer things to customers with a new wrapper on it. And it's a way better, smarter wrapper. But I think the other thing with customer preference is there's this huge digital trend. Everybody loves shopping on Amazon. They like the checkout recommendations. People expect digital everything, and they're lazy. So there's an opportunity, right? That absolutely a change in consumer preference and buyer behavior. But I think none of this, 10 years ago, when Basil started CoverHound, this couldn't have been a strategy because there wasn't the infrastructure. There are still legacy systems. This just wasn't an opportunity to create that elegant, seamless, modular, data-driven, personalized offer. And now those platforms exist. There was a unbundling and now a rebundling of better technology and more powerful technology. I think that's what's driving all of this. Is now the technology is there and companies are striking on that opportunity.
Well, thank you, Russ. That's very interesting as we look at the next question, which I'm going to stay with you for, because partnerships are the bedrock of this new modus operandi. So you, and for those who don't know Covered, right, you have an amazing model where you have partnerships with both carriers that have some of those legacy systems and at point of sale with mortgage companies, which I imagine there's a lot of legacy there as well. So the question is, what makes for a good partnership? And it's so challenging because you're balancing multiple partnerships really to make it work. Tell us about it, and tell us maybe also within what makes it good, how do they differ?
Yeah, I think the bite-size answer, and I'll dive in, is there has to be some cultural overlap. There has to be a target audience or customer persona overlap, and there has to be technology overlap. And without those three things, you have no recipe for a good partnership. I think those are table stakes. So, starting off with the customer persona, right? First, we saw this with travel insurance. Buying a flight, you should tack on traveler's insurance, right? That was an obvious overlap of a customer persona and a needs-based purchase. A Tesla buyer now being offered insurance to drive off the lot, you got to have that auto insurance. A home buyer, where we really shine, embedding this insurance marketplace and offering multiple personalized home insurance quotes to a customer that fits this persona of a home buyer who has to have home insurance before they purchase their home, or even a renter, signing a lease at a new multifamily building. So you have to have that persona overlap. But then when you go beyond that, you can look a little further, right? Because then for us, for example, in partnerships with financial services platforms like, for example, a wealth management or a personal finance app, right? That's not so much, it's certainly a customer overlap. And it's not so much trigger based or needs based, but it is something that is relevant, right? So that's where I think, more of the tech overlap, some of the cultural overlap is really important there, where, for us, partnering with big banks is great, but it takes forever. And that there's a lot of friction in that partnership, right? There's scrutiny on us and third-party vendors, and it just takes time. And with startups that are more nimble, agile, hungry, that's a magical recipe, really, when you have a great overlap of a customer, a needs-based purchase, and both are tech forward and nimble. So there's some different dynamics of go big, go small, but many customers need different things. And so, just for us with home or renters or auto or whatever, property casualty, there are so many points, but it's easy to try to go to many different places, where you really need to focus on something that allows for us to use a platform, use a product, and use data to give something personalized and ideally customer overlap.
Fantastic. Anything to add to those table stakes as Ross has labeled them, which I would agree with? Philip, how about you?
Yeah, I think another one is I'll say is the focus, and again, it's also table stakes, but it's the focus on the customer, right? So why will this relationship, this partnership make sense? And it's really about what are we going to deliver for the customer. And if we're both, assuming two in the party, right? If you're both focused on the customer and really trying to do this customer first approach, then you have a winning formula. So we always try everything that we do. We start with, design thinking and empathy mapping around, let's try to understand your customer when we work with partners, and then, really tailor everything that we do. So I like the focus on the customer and putting away the traditional thinking of insurance, which is pushing a product, right? So we try to remove pushing a product to just really, okay, at that point in time, in that relationship, what is the customer thinking, feeling, seeing, hearing, and then as a result, how do you create the right value prop for them?
Yeah, being available, making it available, right? More than anything else. If it's the right fit, they'll know, and they'll click on the button or whatever the process is, and keep going down that path that they want to go, that is even there now because you've made it available. Basil, do you have anything to add to either of those points?
I think I'm in violent agreement with both of those points, but I think it's such an important point that it's worth tripling down. I mean, Ross called it a culture fit. Philippe, I think, is exactly right too. For me, it's about the partner needs to feel some pain, right? They need to feel the pain that they want for their customer on behalf of their customer, right? In an empathetic way, and say, whatever the current solution that is out there, whether there's something on their platform or not, is not at the level of customer experience that they feel is worthwhile of their customers, and say, this just doesn't fit, right? Whether that's a carrier who is super offline and takes 2 weeks to get back to their customers with a quote, or denies too many claims, or just doesn't have a very tailored product. And they have to be in it for more than just the money, right? If you're just saying, well, can I make a quick buck, a little bit more than whatever my solution is today, it's a lot less interesting anyway. And to a certain extent, I should be careful, but I've been out of cover hunt for long enough. You know, a little bit of PTSD from working with Google back in the day of it wasn't about the customer experience. It was about, you know what, we could have a fully embedded, this is an amazing, much better solution for customers coming in, but ultimately we're going to optimize for click revenue, and we're going to move away from that model. You know, for now, when we're thinking about partnerships, and this is not my primary function at the company, but certainly want to be involved in that, we want to find a customer who says, this is not a good experience for my customer, and I want a better experience. Now, I want to make as much money as I'm making today, if not more, but ideally, that's secondary to the number one goal.
It's so much easier today too. I think, you know, Ross, you talked about that, the gap or the difference between here we are already in 2021 and what it looked like in 2010 when the pioneers like Basil were creating the future. Here we are, and now so many more companies are able to take advantage of that. So next question, we're moving right along. This is great, everybody, by the way. Thank you so much. These are really engaging answers, and let's keep going here. The next question, how are other industries meeting you in the middle to enable embedded insurance distribution opportunities? What are the biggest obstacles? Ross, you had touched on it a bit with your set of partners. Philip, let's start with you this time. What do you see as the biggest obstacles?
Yeah, so I think, you know, in the first part of your question, you know, how are they meeting us in the middle? And I think what we've seen that's interesting, so we've worked with telcos, we work with tech companies, we've worked with, platforms, large, customer engagement platforms, e-commerce platforms, et cetera. And, all of their businesses are competitive, right? So, and why insurance, right? Insurance is another, brilliant way to essentially, and embedding it, adding value to their customers, trying to improve the stickiness, let's say, and then, creating more value and then getting their customers, to retain, right? Not to create them to hop. So they're meeting us in the middle, really looking at, finding out, again, what is the right product, at that point in time, and then the best experience that we can get. Some of the obstacles that, we see, there are two things. One of them is, let's say, speed, right? So startups, technology companies, platforms, et cetera, they work at one speed, and the insurance industry works at another speed, which, let's say, is dramatically slower. And insurers in general, right, have, they have all their legacy infrastructure. They're structured with, silos and layers, right, that come from 100 years of doing things, one way. And now we're talking about breaking down that model. So one of the challenges is when you try to bring these two worlds together is really making it work, right? Finding out how to make it cohesive. So we do a lot of things to basically break down the silos in this world of an embedded policy inside a technology platform. Let's say, if you look at what we did, for Airbnb hosts as an example, we broke down the barriers of a commercial product and a personal product. It was really one policy that protects the host. And so that's one of the challenges, the speed that you work in, and then the baggage that one industry comes with. Another one is, of course, we're in a very regulated industry, right? So heavily regulated industry, of course, here in the US, 50 DOIs, et cetera. So another aspect is, dealing and navigating the regulatory environment if you all of a sudden want to offer insurance inside an app or a platform. So we've overcome some of these things. So we've worked with the regulators, right, up front. We have structures in place to enable, a partner to be able to sell insurance. Some of them, don't want to get licensed. Some of them might want to get licensed. So I'll say the regulatory environment, as well as the speed and the baggage, are some of the challenges. But the really nice thing is, when you find the innovative companies, so the partners that we work with on the insurer side tend to be the more innovative ones, the ones that recognize, all right, what they need to do. And even within some very traditional insurers, you find, these innovative cultures and these leaders that are looking at, and enabling us to put down these walls, these barriers, in order to make these new products work, right? So a lot of times we've been told that won't work, or you can't do that, and have proven with a culture of innovation that it can be done. And at the end of the day, how is it measured? Let's take loss ratios, right? At the end of the day, it's about the business results. So one of these things that couldn't work, we came up with, after a couple of years in business, loss ratios that are half of what they thought they would be, right? Again, because of data and AI and alignment, et cetera. So those are some of the challenges. I'd like to hear what the others have to add to that.
Yeah, thank you. Basil, how about you? What do you think?
I mean, again, agree with a lot of that. I was looking at some of Mark's questions too, kind of who owns the relationship with the customer is one of the thornier questions. And I think, again, what makes going a little bit back to the other question of what makes a good partner is there is co-ownership in the sense of the insurance relationship, and making sure that once they buy the insurance, obviously a lot of that day to day is mutually beneficial if it's the insurance company or ultimately the provider who can really work with the customer and say, okay, well, you've got part of what you need for your business, but here's all these other products. Here's different ways that we could optimize your coverage. Make sure that you are covered from day one and continue to be covered as your operation is changing. And my answers will be more flavored with the commercial space, but in many cases, our bread and butter are new in business, small businesses, and they don't know what their revenue is going to be like in the next year. I mean, does anybody know in time of COVID, right? But especially if you're brand new, and they don't necessarily know what jobs. I'm again thinking of construction more, but this is true for any of these classes. So in that sense, there has to be ultimately the relationship started with wherever it was embedded, and that's an important relationship to manage. And I think that's why it's so important for us to be aligned on customer experience. We don't want to disrupt that. We don't provide payroll. We don't provide point of sale. That's a relationship there. But we do provide insurance, and we do it better than they provide insurance. So we don't think of it as a white label. You can just take it. We'll just be the commodity in here and provide the coverage. It has to be both. So a cop-out answer to Mark's question. Both of us own the customer. It just depends on which part of the relationship.
Yeah, and that changes and evolves constantly here. Ross, how do you feel about it? What are you seeing now?
Yeah, I'll keep my answer tight. I mean, I think we're seeing a lot more collaboration. So organizations, whether they're innovative or incumbents, kind of addressing the fact that they can do better. So we have seen a lot more focus and attention and investment in that space. I mean, look, you got JP Morgan spending $11 billion a year on technology, right? Like, it's a focus area. But with that being said, I think technology roadmaps are probably the biggest obstacle. If it's a startup, they have many competing priorities. If it's a big bank, they have many competing priorities. It's just different. So the smaller guys are more innovative. They're willing, nimble, hungry, enthusiastic, but usually undercapitalized and have a ton of competing resources. The bigger banks have the resources, but they're slow. So a lot of obstacles. Pick your poison.
Well, the obstacles are numerous. The way you overcome them, right, is with success stories. I know you just mentioned JP Morgan. They also have a CEO, a famous CEO, who has said very clearly, they are, or they're going to be a fintech, right? And we've seen others in InsurTech, and I think beyond, say insurance companies need to become InsurTechs. That is just the wave of the future, and that's how it goes, sink or swim, or live or become a dinosaur, right? Is another way of thinking about it. On to the next question. Maybe do a little bit of a quicker question and answer response on this one, because I'll actually pick up on Philip, where you mentioned loss ratios lower than maybe expected. We mentioned at the beginning that customer acquisition costs and customer lifetime values are so closely related to that, right? The other side of the coin there. Could you give us a sense, if you have, obviously anonymously, but just thinking about those conversations that you've had over the years with the partners, do they give you a sense of how that's lowering CACs or increasing the lifetime values for them? Or are there some other relevant numbers that you've seen in the market, either from your own experience or across the market, that prove it out and make the case beyond the shadow of a doubt that this is valuable and only becoming more valuable? What do you think?
Yeah, so, they typically have, convergent services that they offer. They've got their core business and what they do, right? And I can't really comment on CAC or, of that business, but definitely the motivation has been, like I said earlier, if we can add insurance to what we offer our clients, then we know that we create, stickiness, we add more value, and then yes, we can increase, LTV for those customers. We believe that, and among a lot of things that we do, you try to get to this holy grail of avoiding, when it comes to insurance and embedding insurance, it's avoiding a separate purchasing decision, right? Every time the customer has to think, and they might have to pull out their credit card, to think about this purchase decision, you create friction. I mean, at the end of the day, insurance, we're working really hard to make the experience better. It's never going to be a good experience, right? A good experience is picking up a shiny new car, right? And oh wow, if the insurance came with it, that's exciting. You don't go to dinner parties talking about, buying insurance. So, if we can avoid that, then, and create stickiness, because now more and more services are embedded, and that's, our partners are saying, now the lifetime value increases, we're sticky with our customer, we're more relevant to the customer. How hard is it to switch from Apple, right? Because of everything that you've got, embedded there and tied to that. So we look at it from that perspective, in terms of, what's the value added to the partner. And then of course, as back to insurance, the fact that if you can avoid all of these costs because you've got a captive audience and every device that ships is going to include insurance, or every person that's going to buy a car is potentially the person that's going to end up with a part of an auto policy embedded in that process, then, on the insurance side, then yeah, CAC goes way down.
You just reminded me of the Square Trade at the end of any electronics checkout now on Amazon or many other e-commerce sites. That's always a nice one to pick up. And I think somebody mentioned the airlines earlier in travel insurance. Ross, I think it was you. It's amazing how much more ubiquitous it's becoming without us even noticing it. Like, you notice it one day, but because it's tucked into your digital experience, it seems to become part of the fabric almost immediately, especially, again, when you keep in mind who your persona is, what they expect to see, of course, what the partner's doing, seamless blending. All right, I've got a few more questions, and we have some questions from all of our audience guests here. So let's go on to the next one. I'm going to ask Ross. How about from the VC side? You're a CEO, you're a founder. Raising money comes with the territory, and I know, of course, we know Slice and Next have had their fair share of rounds as well here. Talk to us from your perspective, though. How, in your conversations, are VCs viewing this? Have you noticed a change over the last few years? In some ways, it's inherent in your product. In other ways, not necessarily. So talk to us. What are they saying, and what are you hearing?
Yeah, they're definitely paying more attention. And there is a ton of buzz in the space around the keywords, the buzzwords of embedded insurance. I mean, Andreessen and Brewer Lane, like these huge generalists and insurance specialists are talking about it as the themes of the year. So certainly more buzz and interest this year. It's been interesting over the years. I mean, we've been doing embedded insurance for coming up on 5 years here and pitching that, and the dynamic has shifted significantly. I mean, we even see VCs who are saying, what are you most interested in on their LinkedIn or their bio on the website, and it's embedded insurance, right? So I think there's a lot more interest and awareness that this is real and this is going to be big. And so I think a lot of it comes down to, is it product, is it enablement, and what stage of the company, and that kind of dictates where the money's going right now. I think it's pretty early in the game for this embedded insurance as a thesis, and investors kind of piggyback on that. And I think there will be money going more later stage. And I think a lot of VCs are waiting to see what happens and how this shakes out. Some are dipping their toes, and we're grateful for those investors who kind of bought in early with us and see that vision. But I think we'll see a lot more dollars, big dollars, and probably a lot more late stage dollars at this point, because it is a land grab. If you think about how sticky these partnerships are with longer term contracts and embedded experiences, it's a land grab right now. And I think the VCs know that, and they're waiting to see who emerges as the winners. And there will be more than one, there will be many.
Great answer. Philip, you have anything to add to that?
Yeah, I think, we see it as well. And yes, we're, venture backed. We just, as a point, right? McKinsey predicted about 30% of global revenues coming in through ecosystems. Now, not all of that is, embedded insurance, but just take 30% of the global insurance premium, right? Over $6.5 trillion. So you have a $2 trillion opportunity here, premium wise, right? Of basically shifting products that get bought, in a different way. A majority of those can be embedded into another experience. So yeah, you start throwing these numbers around, and yeah, they're paying attention, right? So like you said, I mean, they know the opportunity is big across all lines of business.
Thank you. And Basil, do you have anything to add?
Yeah, I mean, thankfully for everybody, I'm not raising money for Next. Guy does that much better than I would, but have certainly had hundreds of VCs turn me down over the years. And I mean, as Ross said, it has changed quite a bit. FinTech was barely a word 10 years ago, right? InsurTech certainly wasn't. VCs who are even, looking at the space now, I think have many of the same battle scars that we in the industry have had for years. And customer acquisition is really tough. So it's maybe not so much about driving CAC down, but it is not lost on many these days that the best insurance customers out there are not shopping. They are not in the market, almost by their very definition, because the people who are in the market, why are you in the market? Did you just get a DUI and your rate just quadrupled? Yeah, and what's going on? And many of those customers aren't looking to buy from the new guy on the street to begin with. So if you can find a more innovative way to get in front of all of those customers who haven't switched their insurance in many, many, many years, that's a gold mine. Even if your CAC isn't lower, I'm very happy to pay whatever CAC, as long as it's going to turn into LTV, lower loss ratios, higher stickiness, all of those things. Those are very difficult to find. And I do think embedded seems to be a rich vein that I think, as you both used, it seems like the gold rush. Everybody's trying to get in there and get embedded.
Basil, let's stay with you. Thank you for that answer. And let's stay with you for the next question. We'll call it the final question, because I would like to get to at least one or two, if we could, before we end in 7 minutes. So let's keep this one quick too. Just maybe a technical note or an understanding. Ross had mentioned that affinity, right, has been around forever, right? And now there's also point of sale has had its long term already in our minds. Could you perhaps put a pin on what is different about embedded? Is it just the new term because data is so ubiquitous now? Is there something else different about it by its nature? Or really, this is the latest and greatest term, and this is what we're all saying now? How is there any way that you differentiate it, let's say, from point of sale?
I think there is a meaningful difference. I do get the sense that it's thrown around a little liberally. So just like AI or ML or whatever, the machine, deep learning, all those things. But I was chuckling when Ross said that. Affinity has been around forever. I would get a letter from Liberty Mutual saying, "Hey, we've got a special deal because you went to X alma mater." And you're like, "Great, but you know nothing else about me except for where I went to school." Not very interesting, right? So point of sale though is interesting in two ways. You get a much richer data, but that's really been enabled by the fact that even a few years ago, if you think about, a lot of our customers, most of their activities weren't captured anywhere in the cloud. They weren't captured in a point of sale necessarily. It's all paper. And there was no way to really mine that data. So now that's shifted into, whether it's your payroll provider or your invoice system or your restaurant's POS, they're able to take that in and now actually connect it to us, and we can do something with it. So it is a meaningful difference. I do think that it's thrown around too liberally. And I like to think of the more interesting ones versus the 10% off because you went to this school.
Danielle, I think you're muted.
I'm sorry, apologies. I asked Philip, I said thank you to Basil, and Philip, do you have anything to add to that?
Yeah, just I think, point of sale is great, and we've seen some tremendous numbers come out of that. You're still kind of having to make a decision. Like for me, the holy grail is if I didn't have to make a decision, right? I'm getting this product for the service, and I know that insurance is there, that I'm protected, right? So I think it is an evolution. It's enabled by all of the great things we've been talking about today. But yeah, I think it's it's a bit of an evolution as well. All again, what's enabling it is data, right?
Thank you. And Ross, anything to add there?
I think just the key thing to think about with point of sale is more so kind of needs based and trigger based moment in time. I think incumbents and fellow panelists, are really interested in the point of sale for a reason, right? Like for us, for example, being point of sale means that we front run everybody else. We're first, fastest, and easiest. And then if you can and then I think there are kind of two ways to think about embedded, right? Embedded could mean it is just bolted on as a part of a purchase. Like if you don't even have to think about it, like Philippe's saying, like that's brilliant and that's amazing. I think embedded also can be thought about as, it's there if a customer wants it and it's convenient. So I think there are a couple ways to think about it, but.
Yeah, it makes you think also about the long-term, the next purchase, be it a renewal or an expansion of product. If you're already in front with the partner, and again, the partnership's working well, then like anything, why not try to grow that relationship through the partnership? So thanks for making that distinction for us. We're down to just a few minutes left. It looks like we did answer most of those questions already through this dialogue. So I wonder, just a call for any other questions. Does anybody else, if you have any questions that we want to get in here before the end, throw it out there. And if not, then I think we can turn it back over to Marc to conclude. And let's just take one more second. Is there anything else? I'm not seeing anything come up. So
actually, I think there's one that I find interesting. If you don't mind, I'd like to comment on.
Yes, please.
There was a question around, integration, right? The service provider needs to lead the dance on integrations. And I'm not exactly sure what that means, but it kind of raised the light, for me, which I think is key. So if I have a digital experience on a platform that I love, like whether it be Amazon or Facebook, WhatsApp, it doesn't matter, right? So I have a nice digital experience. You can't, this comment about the service provider needing to lead the way, like for us, it's key that you can't, if you're going to offer a digital product, you can't all of a sudden, insurance, and then say yes, and then have, to fill out paper, wait days to get a quote or a rate, then enter more data, then the rate changes. Like you really have to basically ensure that, it's a digital experience. And for us, absolutely, a digital experience is one where you may have zero questions to ask because you can leverage data. But I think that's key, right? If someone's expecting an experience inside an app or inside a platform, it needs to fit there. Like you can't have this, leave and, let's have a nurse come to the house or, whatever it might be. So I totally agree with that comment. And I just thought it was worthy of mentioning for the rest of the audience.
Thank you. Any other? There was a hello to Basil from Todd. So not a question there, but a hello. So always love to see that. We have so many connections here throughout the different groups nationally. also with other groups. I'll hand it off to Mark now. And again, thank you to everybody for joining us today and to our panelists. Mark?
So yes, just to follow up, again, thanks to everyone on the panel for your time today. I think your insights were very helpful. This is a timely topic, and it looks like each one of you have taken a slightly different approach and perspective on it. And I think we're going to see more of this activity as we go along, either because of technology enablement or because consumers are really demanding it and wanting it, and always trying to take and improve that consumer experience around it. So with that, I'll draw to a conclusion. Thank you to everyone who attended today. We really appreciate it. And look for our next event that will be coming up soon. So we'll certainly get a note out to all of you. Emily, is there anything from a housekeeping standpoint as we close?
No, the only thing I was going to mention is that this was recorded. Sorry for those who didn't already know. And we will be socializing the recording and sharing it with everyone at a later date.
Great. Well, thank you, everyone. Have a great
Thanks,
afternoon
everyone.
and a good balance of the
Yeah.
week. Appreciate it.
Bye.
Thank you. Good evening.
Thanks, Dan.